Welcome to today's deep dive. If you've ever wondered how a company can completely crush its financial goals while, barely growing its customer base, you are definitely in the right place.
Yeah, it's a really fascinating paradox to look into today.
Right. So today we are looking at a financial research report. It's dated November 5, 2025, from East Valley Research. And the focus is Rainbow Tours S.A., which is Poland's third largest travel operator. Our mission here is to explore this counterintuitive idea of how a business prioritizes massive profitability over just pure volume.
It really is a masterclass in margin expansion over market share.
Right.
I mean, instead of fighting for every last tourist, they figured out how to make exponentially more money on the ones they already have.
Mm.
The numbers in this report offer some incredible insights if you're looking to understand market dynamics.
Okay, let's unpack this. The data right at the top of the report immediately caught my eye. In Q2 of 2025, Rainbow Tours beat their earnings forecasts, specifically their EBITDA, or core operating profit, by up to 12.8%.
Which is a huge beat.
Exactly, a massive beat. But their booking growth for the summer season was actually sluggish, just 7.6% year over year. So if growth was that low, how did they pull off an almost 13% earnings beat? Is it just jacking up prices?
What's fascinating here is how it all comes down to pricing power, combined with perfect macroeconomic tailwinds. They didn't need a surge of new customers because they were charging the ones they had significantly more. Average prices for popular spots went up by 200 Polish zloty. And then for Q3, prices actually surged 20 to 30% compared to just June of that same year.
But surely raising prices that aggressively eats into your margins if your operational costs are climbing too?
Yeah.
What is happening behind the scenes?
Well, their costs are doing the exact opposite.
Really?
Yeah, if we connect the dots between those higher ticket prices and the global environment, you see a perfect storm. Global jet fuel costs were falling, and the Polish zloty was incredibly strong against the euro and the US dollar. So they collect more revenue per ticket, but spend less to actually fly those tourists.
Creating unprecedented margins. And it seems like a very deliberate choice in who they target.
Right. Look at TUI, for example. The report points out that TUI uses aggressive pricing to capture a younger demographic. Rainbow goes the exact opposite route. They aren't fighting for the backpacker crowd. They specifically target affluent 40 to 60-year-olds who want a guaranteed good time, a cocktail by the pool, and will gladly pay a premium to avoid budget airline headaches.
But there has to be a ceiling to how much you can raise prices before people just stay home.
You would think so. But Rainbow is riding a huge macroeconomic tailwind in Poland right now. If we pan out, you see dropping inflation and interest rates expected to fall to around 3.5 to 4% by mid-2026. Plus, real wages grew by 4.7% just this past September. Everyday consumers actually have the disposable cash to treat themselves right now.
Here's where it gets really interesting. Because of all this, Rainbow Tours is sitting on a staggering net cash pile of 346.6 million zloty. And they aren't hoarding it. They're investing heavily in AI agents, online sales channels, and eco-friendly travel trends. Plus, they're expanding internationally with a 70% stake in a Romanian subsidiary, Parallel of 45.
That Romanian expansion is strategic, but it carries a specific risk, the report calmly flags. Romania had high inflation 9.9% in September 2025. That inflation, plus the investments needed for the Romanian office network, is expected to cause that subsidiary to report a loss in 2026. That could drag on short-term results.
But even with that risk, East Valley Research is incredibly bullish. Their conclusion maintains a BUY rating and actually increases the price target for Rainbow Tours to 213.20 zloty. That is a massive 73.8% upside.
It shows immense confidence that the strong pricing power and macro trends will easily outweigh those short-term regional hurdles.
So, what does this all mean? Whether you are analyzing investments, running a business, or just planning your next holiday, this is a masterclass in leveraging macro tailwinds. It proves you don't always need to sell more units to be successful. Sometimes you just need to sell smarter.
Absolutely. And I want to leave you with a thought to ponder based on a tiny detail in this report.
Yeah.
We mentioned Rainbow investing in AI agents for their sales channels. If traditional tour operators successfully integrate AI to hyper-personalize itineraries based on all this data, how long until the algorithm knows your perfect vacation better than you do, effectively eliminating the need for you to ever plan a trip again?